Hi everyone, welcome to the SBR Topic Explainer video on disposal of investment. I am your subject expert Aleena Kareem. Today we are going to discuss the disposal of investment for our ACCA exam strategic business reporting. Now in this case we are going to talk about different types of investments, and please remember, over here we are not talking about the disposal of an asset. We're talking about the disposal of an investment. So what are the different types of investments and how they affect our financial statements when they're disposed of? That is going to be covered over here. Please do keep this in mind that we are going to discuss the key areas that are tested in your exam and how you can approach them in your preparation. However, this video is not going to cover the complete accounting treatment or have a question debrief in this. I am going to refer to the ACCA study hub, the content that is there, the practice questions that are there. But other than that, this is more of an overview explaining what you need to cover in this topic to ace it in the exam. So let's start with this. Now, first of all, when we talk about the disposal of investment, the common area that is tested in our exam is the disposal of subsidiary. So we have the control on a company and then we dispose of completely or partially our stake in it. So in that case, that is called disposal of subsidiary. Now, in the broader umbrella, this is also an investment that we had made. As you know, when you talk about investment in any other company, so in the consolidated financial statements, they are called subsidiaries. However, in the individual financial statements, they are still referred to as investments. So this is the disposal of investment, but the key area that is tested in your exam is the disposal of subsidiary. Now, when we talk about the disposal of subsidiary in our exam, there can be 2-3 different ways in which it can be tested. So you can have a complete disposal. So let's suppose you have 80% stake in a company and you decide to sell off that completely. So that is called a complete disposal. Also, there can be partial disposal, and partial disposal can lead to multiple cases. The first case is that previously you had a subsidiary, so you had control over a company. You had, let's suppose, 80% investment in it. Now you have sold off 70% of that part. And now you are down to 10% of your investment. So that is called a movement from subsidiary to being a financial asset, right? Then the second one is subsidiary to associate. Previously, you had 80% stake in a company, 80% holding. Now you have, you disposed of, let's suppose out of that 80%, you disposed of 30%. So 50%. So now out of that 80%, you have disposed of 50%. You're left with 30% investment. This is going to be called an associate. So movement from being a subsidiary to being an associate. And thirdly, there is a movement from being subsidiary to subsidiary. So you had 80% investment in a company, you decided to sell off 20% of it, still you have 60%, still you have control. So there is a subsidiary to subsidiary case. Again, in your exam questions, the first most important part is to identify what kind of disposal the examiner is talking about and whether the examiner is asking you the treatment in individual financial statements, which is slightly less likely in our SBR exam because that's very easy and that is covered under IFRS 9, which talks about the sale of financial investments. However, mostly we are talking about subsidiary financial statements, and however, mostly we are talking about consolidated financial statements and the impact of disposal over there. But be careful. The individual treatment has also been tested in the exam, so you have to see what part is being covered. So, moving on to the next part, when we talk about the disposal of subsidiary, the next thing that you have to identify in an exam question is that whether the examiner is asking you to calculate its impact on the statement of financial position or the examiner is asking you to calculate the impact on the statement of profit or loss and other comprehensive income. You are required to make extracts of financial statements. So be very careful what the examiner is asking for. So far we have discussed two major things. In your question, identify whether they are talking about the impact of disposal on an individual financial statement or a consolidated financial statement. And secondly, which financial statement is being tested? Statement of financial position or statement of profit or loss? We will have a quick overview of both of these, because based on these, the consolidation procedures during the year are going to change. So if a disposal took place during the year, the profit or loss is going to be different, maybe for the first part of the year, and then after disposal it is going to be different. So very importantly, always see what is the impact and how it is going to be accounted for. And the second most important part is that how now the investment is going to be accounted for at the year end. So these are the four parts that are very major from your exam point of view, that you have to identify what procedures you need to apply during the year and how the investment is going to look like at the year end, which is why it is important to know what the change has been from the previous slide. What has been the change? Subsidiary to subsidiary, subsidiary to zero investment, subsidiary to financial asset, subsidiary to associate, and which impact is being discussed, which statement is being discussed. Very importantly, what is the date on which everything is taking place? Because based on that, your procedures during the year may change. Because before the disposal date, the accounting treatment of P&L is going to be different. After the disposal date, the treatment is going to be different. Even the impact on statement of financial position is going to be there, because any kind of gain or loss on disposal is going to be discussed in the, it is going to have an impact on the statement of financial position also. Then, when we talk about the syllabus perspective for this particular topic, one of the most important areas, and just like piecemeal acquisition is very frequently tested, the disposal part is also a very frequently tested topic. In this case, the first thing that you need to know is the consolidation procedures in general. Please remember, you come to this topic once you are done with the basic consolidation techniques that you have covered in the FR exam, because this topic is going to build up on those areas. If you have a weakness in the basic understanding of consolidation procedures, you're going to struggle in this area. So please revise properly the consolidation procedures that were there in the in your FR exam. There, only full disposal case of subsidiary was existing. Over here, we are going to talk about the piecemeal disposal, what we call also. So in this case, please, first of all, have a perfect technique for consolidation procedures basic, because unless and until you know already what the accounting treatment of subsidiary is going to be, what the accounting treatment of associate is going to be, how can you possibly apply that pre and post disposal? So have the basic techniques very clearly done. Then not just in your regular financial statements, this is an area which is going to impact the foreign operations also. We have another video on foreign operations and the consolidated financial statements. In that, I touched upon the disposal part as well. So we're not covering this over here in this particular video, but please keep this in mind that these disposal procedures, so first you learn the basic accounting treatment, then you learn the consolidation procedures with respect to disposal, and then you move on to the foreign operations and see how the disposal is going to take place in their case. Then this is the syllabus area, which is clearly defined in your syllabus provided by ACCA also, that in case of financial statements or group of entities, it says that evaluate and apply the implications of changes in ownership interest and loss of control or significant influence. This tells us one more thing, that our course is not just going to touch upon the loss of control, it may also talk about the loss of significant influence. So you have to cover both the disposal of subsidiary, and the disposal of associate also, the investment in associate. So any implications of changes and loss of interest, that is going to be discussed, and then evaluate and apply the principles related to consolidation of foreign operations, including subsidiaries, associates, and joint arrangements and their disposal. So the syllabus guide comprehensively tells you that this topic is there and it can be tested in any possible way. Also, all of these topics, they are then tested in the AAA exam, or also if you take up that optional exam, because when you are doing the audit and assurance, you have to do it off the standards. So you need to know what the standards actually are to tackle what is wrong in them and audit them. Now, coming to the disposal of investment, mainly the statement of financial position part. So when we talk about the consolidated statement of financial position, right now we are just going to discuss that. Later on, we'll move on to the consolidated statement of profit or loss also. So when we talk about the disposal of investment in case of consolidated statement of profit or loss, the first thing is that you have to identify whether there has been a loss of control or not. If there has been a loss of control, and the good thing in our exam is that the examiner shows you the loss of control in terms of percentage, that the percentage has now decreased. It has gone below 50%. So if there is a loss of control, then what you have to do, you have to de-recognize the carrying amount of assets. Please remember, if there is a loss of control, then the subsidiary is now no longer our subsidiary, right? So you do de-recognize the carrying amount of assets, including the goodwill. So if I talk about the credit part of this double entry, that's going to credit all the net assets and the goodwill also. And then you recognize the fair value of consideration received. Definitely, if you're disposing of your investment, you're disposing of your subsidiary, you're going to take some kind of consideration against that. So if it is cash, it is going to be cash. If it is in some other form, then the fair value of that particular item is going to be used over here. Then, once you calculate the difference between the two, the fair value of the consideration received and the fair value of the net assets that have been given up, including the carrying value of the assets and very importantly goodwill. This is a very important area. A lot of students, when they are doing this in exam pressure, they miss out the part that they have to dispose of goodwill also that is existing in the business at that particular date. So you have to remove that also. And the difference between these two, if there is a gain, that is for the owners. If there is a loss, that will also go to the owners. So that is, if we talk about the consolidated statement of financial position, we know that the owner's interests are lying in equity. So this is going to go and this is going to impact our reserves and our retained earnings. So this is how we are going to recognize this in general. Now, there are certain complications also that may come up in this. Now, when you talk about the loss of control, another important thing comes up, and that is that you have to reclassify to profit or loss any amounts that are related to that particular investment in your other comprehensive income. Remember, we talk about the fact that once that the other comprehensive income mostly has unrealized gains and losses. So if there is any gain or loss that is remaining, any amount that is remaining in the other comprehensive income, which is they are related to this particular investment. Now that the investment is no longer there in our business, we have realized it, then we are going to reclassify, we're going to recycle the related gains and losses from other comprehensive income, and we are going to charge them to the statement of profit or loss. So this is a very important point that you have to remember. Identify this in your question. It may be asked theoretically also, that how are you going to manage such a gain or loss? Then, recognize any resulting difference as a gain or loss in profit attributable to the parent, and recognize the fair value of the residual interest. So when we are talking about the recognition, so the part that we have disposed of, if there is a full disposal, then there is no residual investment left. However, if there is a partial disposal, then we have a residual interest also. And that residual interest is going to be recognized at fair value. Any gain or loss is going to go to P&L. So you see, remember, that it is not possible that we have disposed of an investment and maybe a gain related to that is still lying in our other comprehensive income. We have to reclassify all those items. Now, in case of partial disposal. We have to see once again whether a loss of control takes place or not. Now, out of the three cases that we discussed for the partial disposal, loss of control takes place whether there is a subsidiary to associate transaction or there is a subsidiary to financial asset transaction. Just like I told you that if the investment has gone down from 80 to 10%, then now 10% holding in a company, that is going to be accounted for as a financial asset under IFRS 9. However, if it is in the, let's suppose 20 to 50% of the range, then it is going to be recognized as an associate. So greater than 20 and greater than or equal to 20% or less than 50% investment. That is going to be an associate. Now, in this case, when we talk about the control that has been retained, that is going to be related to subsidiary transaction. Now, over here, the treatments are going to be completely different. This is going to be treated as a transaction between owners, and the adjustment is going to be made in NCI and reserves. Now, please see, over here, we are talking about a completely different working. We are saying that when you dispose of and there is a loss of control, and the transaction is from subsidiary to associate or from subsidiary to financial asset, what are the procedures that you follow? We just covered these. That you have to de-recognize the carrying amount of the assets because now you no longer have control over them. The assets and liabilities cannot be consolidated. They cannot be added on a line-by-line basis. You have to segregate them. You have to remove them from your investment. Then you have to recognize the fair value of the consideration received and the remaining amount other than the gain or loss on the investment that is going to be recognized at fair value. What are these investments? They can either be associate or they can be financial assets, right? And once they have moved to this stage, then the next question is, what do we next with it? Very simple. It's an associate. Don't even think again that this was a disposal and this was previously our subsidiary, because once at the date of disposal, you have reclassified it as an associate. Now going forward, whether you purchased it on that date or you previously had more stake in it and sold some off, remaining is here, it doesn't matter, because all that matters now is that you have an associate. So now you're going to apply the equity method of accounting on it and you're going to recognize the associate just like any other normal associate for the remaining year and going forward. Similarly, when we talk about subsidiary to financial asset, then on the date that you have disposed it off, you calculated the fair value, you recognize your remaining interest at the fair value, and now you are going to assume that you purchased this financial asset from the market. The treatment is going to be exactly the same. Your classification, whether it is going to be at fair value through P&L or fair value through OCI, as per IFRS 9. So now I'm completely going to think about IFRS 9. I'm going to forget that previously this was my subsidiary for the remaining year. For the initial part of the year, let's suppose I disposed of my main portion of subsidiary after holding it for 3 months. For the first 3 months, I'm going to do the treatment of subsidiary in P&L as well as whatever the adjustment is required in statement of financial position. But for the remaining 9 months now, it is just like any other financial investment. It is just like any other financial asset. So when you make an investment in equity of a company in the financial instruments, what do? You classify it either as fair value through P&L or fair value through OCI, and you recognize the gains and losses accordingly. So just do the same for this one also, right? However, if you're talking about the disposal in which the subsidiary to subsidiary transaction took place, we said it was just a transaction between the owners. So some part went from the parent company to the NCI portion. So the adjustment in this is going to be made within NCI, which is your non-controlling interest, and the reserves. Remember, no change in the line-by-line addition of the assets and liabilities. It was previously a subsidiary, it is now a subsidiary. All the consolidation procedures are going to remain the same. The only difference is going to be that when you are distributing the profit for the year, so let's suppose for the first 3 months you had 80% investment and for the remaining 9 months you had a 70% investment. So for the first 3 months, we're going to give the parent company a share of 80% in the profits, and for the last 9 months, we're going to give them a share of 70%. And the remaining is going to go to non-controlling interest. So this is the only difference. Otherwise, there's going to be line-by-line addition of assets, liabilities, the treatment of the sales, cost of sales, intra-group adjustments, all of that is going to remain exactly the same. Which is why I said that before coming on to this topic, you need to have a very good command on the basic consolidation procedures, right? Because this is just identification and calculation of gain or loss. Remaining, you have to show your consolidation technique, which is why by testing these topics, the examiners test both, and they love these topics. Now, so when you talk about exam application, consolidation is very commonly tested in your question number 1. Normally, it can come up in the calculation part where you have to make an extract of a financial statement, or it can be tested on a theory basis, or it can be tested in any other exam also. So question 1 definitely has consolidation portion, but the disposal part that can come up in any part or of any question of our exam, be it ethics or any other stakeholder analysis, that can be there, right? Now, when you talk about disposal of investment from the consolidated statement of profit or loss and other comprehensive point of view. So we just discussed the statement of financial position part. Now let's see what is going to happen in the statement of profit or loss and other comprehensive income. Once again, the scenario is the same. There may be complete disposal. If there is a complete disposal, you recognize the gain or loss on disposal. In the same way, we just discussed that. How do you calculate the gain or loss? You see the assets that you have given up, the goodwill that you have given up, and the consideration that has been received against that. The differential is going to be your gain or loss on disposal. If there is a remaining investment, you need to calculate that on the fair value, and the difference is going to be your gain or loss on disposal. Now, this is the interesting part. When we talk about the statement of profit or loss, see, statement of financial position is made as at. So at the reporting date, if a subsidiary is not your subsidiary, you do not need to make consolidated statement of financial position. However, when you are talking about the statement of profit or loss, the statement of profit or loss is made for the year, right? For the period. So in this, if the subsidiary, even it was subsidiary for 1 month, you have to show the consolidation for that 1 month. If it was more, that is also there, but you have to consolidate the subsidiary following all the basic consolidation procedures till the date of disposal. After the disposal, the situation is going to change. So coming to, if there was a full disposal, then our life is easy. We just consolidate it till the date of disposal. After that, we just make the normal individual company financial statements. However, they can be tricks. Everything happens in the market. So partial disposal can be there if it was during the year. If it was in the past, the examiner said in the previous year there was a partial disposal, it is not going to impact our statement in the current year. However, if it happened in the current accounting period, how do we account for that then? So the first thing over here is subsidiary to financial asset. So when we are talking about subsidiary to financial asset, very easy. Just think about it. For 3 months, it was our subsidiary. What do? We do the consolidation procedures. We recognize it as a subsidiary in our financial statements. We do all the consolidation procedures that are there for the subsidiary for those 3 months. And then what do we do for the remaining 9 months? For the remaining 9 months, now we are going to apply IFRS 9. What do we do if we have an investment for 9 months? If we have an investment for 9 months, that is then going to identify whether it is being held at fair value through P&L or OCI. What was the fair value at the date of disposal, partial disposal? What was the value at the reporting date? The difference between these two is either going to go to P&L or OCI. whatever the company has chosen. So do very segregated calculation and show it to your examiner that for the first 3 months, this was my subsidiary, so I'm doing this working. For the last 9 months, this was just an investment. It was a financial asset, so I'm doing the working accordingly. Then subsidiary to associate. Again, by now, I'm sure you have learned the concept. For 3 months, it was subsidiary, line by line addition. Sales, cost of sales, any intragroup adjustments are going to be subtracted. However, when you talk about the last 6 months, what do we do in case of investment in associate in P&L? Again, I'm reiterating the concept. You need to know this basic language. Otherwise, you can't handle disposal questions. You already need to know what happens when I have an associate for 9 months. You take the share of the profit for the year. You apply your percentage on that. You take the profit after tax. You apply your percentage holding. In this case, now you're going to apportion it by 9 months also. And then take that part and include it in your consolidated statements. So be very clear. Nothing difficult in this. For first 3 months, just remember, forget it is going to get disposed of. For the first 3 months, account for it like a subsidiary. You had a subsidiary for 3 months in the year. For the last 9 months, forget some part has been disposed of. Recognize it as an associate which was held for 9 months. Only extra thing that you need to do is that for the change, you have to identify the gain or loss on disposal and you have to show it in your statement of profit or loss. Then lastly, subsidiary to subsidiary, our life is much easier. For the whole year, straightforward, follow all the consolidation procedures, all the line by line additions of sales, cost of sales, admin expenses, distribution expenses, intra-group adjustments are going to be done, unrealized profits are going to be removed, intra-group, any kind of adjustment, interest, sales, everything is going to be adjusted for in exactly the same way that it is done. However, when you are distributing the profit, when you reach that stage where you say profit attributable to non-controlling interest, at that point in time, now you have to segregate it because for the first 3 months of the year, let's suppose the NCI had a 20% share in the business and for the last 9 months, they had a 30% share. So you need to segregate that, calculate that and put that in accordingly. So this is a procedure that you have to follow and identify the figures from the question and account for them. So this is the overall working that you have to follow if you have a partial disposal during the current accounting period. So nothing different. Very importantly, once again, I'm sorry, I'm saying this again and again, but this is an error that the students make, that once they reach SBR, they're more interested in knowing, okay, what's new that is tested in SBR in terms of consolidation. See, more than half of it is what you've already covered in FR. You need to have a very strong command on basic consolidation procedures because once you've identified that, oh, it was associate for 9 months, now you need to know how associate is dealt with and do the working treatment accordingly. So these are the main areas that are going to be there. Now, before I move on to the past exam questions, we are going to see a couple of techniques that are going to be there. As I say always in my videos, please, once you read the question, even before starting reading the question in complete detail, read the initial part and see the requirements. Because once you know the requirement, that what exactly is it that the examiner is asking for, then you can read the question again in the same context. And that is going to help you. Then you have to extract the data from the question accordingly. If you have more data, identify the figures that are there. Where is the fair value mentioned? What is the percentage holding? Very importantly, what is the date on which the disposal took place? Because everything revolves around that date. Start of the month, end of the month, be careful about it. Whether it happened on 1st or it happened on 31st. Because that's going to change the number of months for which it was a subsidiary and the number of months for which it was maybe, a financial asset. Then, once you're writing your answer, your question number 1 or any other question is not just a calculation based question. You saw that this also had a level 3 in the syllabus guideline, which means that you have to synthesize it, you have to evaluate it, you have to tell the examiner whatever is happening, what is the logic behind it, right? So in that case, also identify the relevant concepts. We are talking about substance over form. Consolidation is mainly based on that. How is that impacting our working? Why are we showing the profit or the sales of 3 months? Because matching concept is there. It was our subsidiary in those 3 months, all of that. So you have to explain it in terms of principles also. Then once again, see the marking scheme to identify how many valid, well-developed points you have to make to get the marks. Normally, the marking scheme is segregated further also. Identify, and if there is anything, normally in terms of consolidation questions, at times the question is a little longer and it says what was the disposal procedure that was followed and how do you account for this after the disposal. Once again, maybe also you have to read the question very carefully. In the requirement, normally the consolidation questions, they have a slightly long requirement. So they may be asking you for a particular accounting treatment. So let's suppose what will be the calculation of goodwill at this particular date and how will this disposal be shown in the consolidated financial statements and in individual financial statements. So this and also is very important. You have to identify what are the different parts of the question. The marks are allocated to all parts of the question, and remember, your ACCA question always has all the relevant information. So you have to pick it out, and every word is going to impact your answer. Link it to the marking scheme and answer accordingly and have a very good conceptual understanding. Please see, this is a strategic professional exam. Over here, you have to behave like a strategic professional. So you need to have a conceptual understanding of not only what is happening, also the why. Why is this happening, right? Now, as we said, full disposal, partial disposal, see the question very carefully, what is being tested, and answer it accordingly. I'm emphasizing this again and again because this is a very frequent error that the students miss out this part and they do the calculation in one way or the other. Now that we have covered the calculation part of profit or loss from disposal and what is going to be constituted as discontinued operation also, let's see how it is going to be placed in the consolidated statement of profit or loss as per the format suggested by IFRS 18. IFRS 18 says that while making the consolidated statement of profit or loss, the profit from continuing operations should be showed separately. Once that figure has been highlighted, to that we add the profit or loss from the discontinued operations. So one part is that we have a gain or loss on disposal of the subsidiary, but the other part is that we have to consolidate it till the date of disposal. So the standard over here says that whatever the profit or loss from the discontinued operations is, we have to show it on the face of the statement so that the stakeholders can get to know in one glance that this profit or loss is not going to be there in the next year. And after that, the final profit that has been calculated, that is going to be distributed between the profit attributable to the owner and the profit attributable to NCI. Now, practice, practice, practice. My mantra always. No topic is complete without practice. So let me take you to the study hub to show you where this topic that we just covered, you can study it in more detail and how you can access its practice questions also. Here we are in the ACCA study hub to see how the learnings that we have done can be applied to questions. Here the relevant chapter is the changes in shareholdings. We can see that there is a discussion about disposal of a subsidiary, disposal of an associate also. Now, when we see the impacts in it, the first thing is identifying whether we are talking about a separate company financial statements or a consolidated financial statement. And then in the consolidated statement of profit or loss, we need to identify that how are we going to account for the changes before and after disposal. Now over here we can see that let's suppose there was a 90% holding in subsidiary. Afterwards there is zero, complete disposal. So consolidation is going to be done up till the date of disposal, and then there is no treatment in statement of financial position. Similarly, if it's a movement from subsidiary to subsidiary, consolidation remains as it is, but NCI part is going to be distributed because during the year, NCI changed. Initially, it was 10% and later on it became 40%. At the reporting date, the consolidated statement of financial position is also going to show consolidation, but only the NCI calculation is going to be done as per the changes which happened during the year. When we talk about subsidiary to associate, then till the time it was a subsidiary, it is going to be treated like a subsidiary. Later on, it is going to be accounted for using equity method of accounting as for the associate, and any kind of disposal related workings are going to be shown. And from the subsidiary to financial asset, the results are going to be consolidated till the date of disposal, and afterwards IFRS 9 is going to be applied. So this is about the changes. Now over here we can see multiple examples also, that when there is movement in equity, then in such cases we need to identify the holding before the change and the holding after the change, and any kind of disposal that is taking place, then we need to do its calculation accordingly. So when there is loss of control, it's different. When there is no loss of control, then it's different. Now disposal with loss of control is something which needs a more comprehensive working, like we discussed earlier as well, that we are going to take the proceeds. So let's suppose there was 80% shareholding. So the proceeds are of 80%. For the carrying amount, we are going to see the net assets of the whole company 100%, goodwill of the whole company 100%, and from this we remove the NCI share so that we get the profit or loss on disposal. The same kind of working is going to be done for partial disposal as well. And once this amount has been identified, we are going to show it in the consolidated statement of profit or loss, the profit on disposal or loss on disposal, as well as the profit or loss of the discontinued operation during the year, that is going to be shown. Then for the accounting, we need to be very careful about the calculation of NCI, because that is going to change during the year if it's a subsidiary to subsidiary relationship. But where it is a loss of complete control, then no NCI exists, and at the reporting date, no consolidation is done for the statement of financial position. Now, there is another concept called deemed disposals. This is where the shareholding is reduced, but this may be because the parent does not take up a right issue, another party exercises options, or subsidiary issues shares to third party. So overall our investment has diluted. So in this case of the deemed disposal, you first calculate the initial shares that were being held, then after the share issue was done, how much was being held, and there is a deemed disposal for which we are going to calculate the sale proceeds, which are going to be done based on its share of the proceeds raised on that particular share issue. That is how it is calculated. You can go through the remaining accounting treatment also in the ACCA study hub. And here, discontinued operation. Over here also you can see the format that we are going to very importantly first calculate till the date of disposal what was the amount to be consolidated. Then we are going to calculate the profit or loss on disposal. Combining the two figures, we are going to show it separately as a line item on the face of consolidated statement of profit or loss. Here is the working with respect to disposal of associate, and when there is loss of significant influence, here also we need to calculate the gain or loss on disposal, and it needs to be shown in the statement of profit or loss. If we come to the practice questions also, There are questions which are related to the consolidation part. You can see the workings. There are multiple topics to which the areas have been allocated, but you can see over here that changes in shareholding, that here is a question named Bresche. In this also, they are talking about an acquisition first, and at the date of acquisition, all the working has been done. Then goodwill was impaired, and then the company sold 65% of equity shareholding in SBR for 13.2 million. So working with respect to that, and then there is another shareholding which has been sold off for a value of 1.6 million. So over here you have questions which you can attempt and see the answer of, which are directly applying the knowledge that we have just gathered. Here is a quick look at the answer also for you. Please make sure you attempt the short questions first from the main chapters. That will give you a good hands-on practice. Also, be very careful. We talked about the loss of control as well as the loss of significant influence. So in the chapter also, there was separate segment for disposal of subsidiary and disposal of associate. This is what the question is looking like. So you have a complete detail available with workings of what your disposal area is going to look like. Please attempt this question also to apply and evaluate how much you have learned, but after covering all the required practice and going through the text also for your practice. Now let's move back to the presentation to complete our video. Coming back to this, very importantly, practice a lot, because that is going to be the key. Please comprehensively cover these concepts and then focus a lot on practice, written practice. By written practice, I mean on the platform practice. Then keep it time bound, actively read the solution and match it with your answer. Do self-evaluation also. Or maybe if you want to get it reviewed by someone, get it marked by someone, take that facility to identify how well are you performing. Your exam should not be the first time when you are attempting a disposal question, right? I hope you found this value useful. And please focus a lot on this topic, because it is very important from exam point of view and come up in any attempt in any part of the exam. So I hope this video helped. Please use this to study further, to prepare your topic further and to do your practice also. Thank you.